Gold has had a record run this year, and silver hasn't been far behind. Silver outpacing gold, but still shy of its highs. That's thanks to traders rethinking their rate cut expectations. While silver is down from its highs, our next guest is upgrading his forecast for the metal. Michael Hsueh, who is the Deutsche Bank research analyst, is here with more. So, Michael, take us into your thesis here on silver.
Okay, so silver is kind of it's bipolar. It has two different personalities, right? One is as gearing to the global manufacturing cycle, and two is as a sensitivity to gold, usually with a beta that's above 1. And right now, with the global manufacturing cycle not really doing a whole lot, I think in the U.S. certainly we've kind of troughed in a mid-cycle slowdown in over the course of 22 and into the mid 2023, and now we're kind of in a very shallow recovery from that. But I think broad picture on the manufacturing cycle, it's not a very strong input to the silver price at the moment. There certainly are historical instances when it can be, most notably in the lead up into a recession and coming out of a recession from that recovery, can be very stark in terms of their impact on silver. But right now, it seems to be the sensitivity that gold that's really dominating silver at the moment, and that has given us a bit more of a lift to where we expect silver can end up. And so I think a lot of the story for silver at the moment does come back to gold, in fact.
So interesting. As we're continuing to take a look at both silver and gold and some of the kind of price movement that we've been tracking, not just over the course of this week, but over the course of this year, and the correlation that you were talking about just a moment ago, I wonder from this point forward what the outlook looks like for the rest of this year. What is going to be the catalyst that really pushes either of these commodities back towards all-time highs?
Yeah, and to recall, we're really not that far off those nominal all-time highs. And I think what we're seeing at the moment is kind of the market taking stock, really, after what we had in March and April, which is, to all intents and purposes, a kind of historic investment inflow into gold of historic size, really, that we could compare with what happened in 2013 in terms of the outflow in gold as the Fed was dialing down the pace of bond buying, and then contrasting that with 2022, the big boost in central bank buying in the second half of the year that really helped gold diverge from fundamental fair value models. And so the buying that we've seen since March and April has been, easily of a comparable scale to what we saw in 2013 in terms of selling, and then 2022 in terms of central bank buying. So, that's a huge slug of investment demand that's just come through. And the market's now thinking, how much of a correction do we get? Our thesis has been that the correction is going to be relatively modest in gold because investors around the world came into this year with a bullish bias. It just wasn't, I think, the acceleration in demand that we had in March and April, that pace of acceleration and the timing of it was just not necessarily foreseen. And so I think any correction is going to see healthy investment demand to pick up from that correction as we go through the year, and as a Fed easing cycle remains on the cards, even if that's been dialed back and pushed back by a massive amount. I think the bullish bias over kind of a 1 to 2 to 3 year view is still going to remain to the upside for gold. And so it's a matter of silver playing along with that for the most part, and even potentially getting a little bit of uplift if the manufacturing cycle does improve moderately, which it seems like it is.
Certainly. And Michael, you started to touch on exactly what I was just about to ask you, which is how much of what we're seeing in gold and silver is directly correlated to the pushing out of some of those rate cuts, or at least the probability of those rate cuts from the Fed as they kind of continue along their own policy pathway and looking at inflation continuing to remain hot and not having the kind of data, at least in the trend that they're looking for to firmly cut at this juncture?
Yeah, I think we came into the year with the expectation that it would be all about the Fed, quote unquote, for precious metals. And in the end, it really has been, but not quite in the way that we had expected. I think that if you had told us that we had gotten the amount of dialing back of Fed easing that we had, we'd certainly have been quite surprised to see gold where it is at the moment. And so I think the overriding influence from the Fed cycle is that investors can still look forward to and are still looking forward to an easing cycle. It's less important the timing and the depth of that cycle than the fact that that cycle is coming, rather than at various points when some people thought that we would be getting a further hiking cycle or further significant hiking cycle. And as long as that doesn't seem to be coming to pass, I think that investors will maintain a bullish bias on the precious as a whole.